Welcome to the Riskwiser Zone. I'm your host, Louis. We're glad you're joining us today as we navigate the ever-changing landscape of stocks and finance. As we always say, a wise investor is an informed investor, so let's dive into the latest news that's making waves in the world of economics. We've got a fascinating story to kick off our show today. It seems like President Trump is playing a game of economic Jekyll and Hyde, wanting to take credit for the good parts of the U.S. economy while blaming his predecessor, Joe Biden, for the not-so-good parts. Now, we're not here to play politics, but rather to provide you with a balanced view of what's happening in the world of finance. According to recent reports, Trump has been trying to distance himself from the current economic downturn, citing that the bad parts are a result of Biden's policies. However, many economists and experts argue that the tariffs imposed by Trump are having a significant impact on the economy, leading to increased uncertainty and anxiety among consumers and businesses. Now, let's take a step back and look at the facts. During Biden's term, the U.S. economy experienced a period of growth, with the Dow Jones Industrial Average climbing 39% and the S&P 500 soaring by 55.7%. The job market also saw significant gains, with 16.6 million jobs added during Biden's 4 years in office. On the other hand, Trump's tariffs have been met with criticism from many experts, who warn that they could lead to a further decline in the U.S. economy. John Kasich, a Republican and former governor of Ohio, even went so far as to say that blaming Biden for the current economic situation is like saying the dog ate my homework. As investors, it's essential to separate fact from fiction and not get caught up in the political rhetoric. We need to focus on the numbers and the data, rather than relying on emotional appeals or partisan spin. So, what does this mean for your investments? Well, that's a great question. With the current economic uncertainty, it's more important than ever to have a diversified portfolio and to stay informed about the latest developments in the world of finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Stay tuned! Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of business and finance. Today, we're talking about a significant development in the corporate landscape that's got everyone buzzing. Warren Buffett, the legendary investor and CEO of Berkshire Hathaway, has announced his succession plan, and it's a Canadian who's been tapped to take the reins. Greg Abel, a veteran executive with a proven track record, will be succeeding Buffett as the CEO of Berkshire Hathaway. This move has sent shockwaves through the business community, with many wondering what this means for the future of the conglomerate. Abel has been with Berkshire Hathaway for over 2 decades and has been instrumental in shaping the company's strategy. As we explore this story further, it's essential to understand the context behind Buffett's decision. The 91-year-old investor has been at the helm of Berkshire Hathaway for over 5 decades, and his legacy is unparalleled. He's built a reputation for being one of the most successful investors in history, with a track record that's hard to match. So, what can we expect from Greg Abel as he takes over the reins? For starters, he'll be facing some significant challenges, including navigating the complexities of Berkshire Hathaway's vast portfolio and making tough decisions about where to allocate resources. He'll also need to contend with the current market volatility and geopolitical uncertainty that's affecting businesses around the world. One of the key questions on everyone's mind is whether Abel can replicate Buffett's success. The Buffett premium, the notion that Berkshire Hathaway's stock price is inflated due to investor confidence in Buffett's leadership, is a significant factor in the company's valuation. Can Abel command the same level of confidence from investors? Or will we see a shift in the market's perception of Berkshire Hathaway? As we consider these questions, it's also worth noting that Abel has a unique opportunity to put his own stamp on the company. He may choose to take a different approach to investing and strategic decision-making, which could potentially lead to new opportunities for growth and expansion. Ultimately, Only time will tell how Greg Abel's tenure as CEO of Berkshire Hathaway will play out. One thing is certain, though, this is a significant moment in the history of the company, and we'll be keeping a close eye on developments as they unfold. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're joining us again as we dive into the latest news and updates from the world of finance. Today, we're looking at a significant development in the business landscape, with Brookfield Asset Management announcing the results of its annual meeting of shareholders. As reported by GlobeNewsWire, all 12 nominees proposed for election to the board of directors were successfully elected at the company's annual meeting held on May 5, 2025. The detailed results of the vote show a strong level of support from holders of Class A limited voting shares and Class B limited voting shares. It's worth noting that Brookfield Asset Management is a leading global alternative asset manager with over $1 trillion of assets under management across various sectors, including renewable power and transition, infrastructure, private equity, real estate, and credit. The company's commitment to investing client capital for the long term, with a focus on real assets and essential service businesses, has been a key factor in its success. In related news, we also have an update on Parkland Fuel Corporation's rival. Parkland, which is not directly related to our current topic, but shows how other companies are performing. However, let's get back to Brookfield Asset Management. The election of the 12 directors nominated by management received strong support from shareholders, with all nominees receiving over 97% of the votes cast. This outcome suggests that shareholders have confidence in the company's leadership and strategy, which is essential for navigating the complex and ever-changing landscape of global finance. As we always say on the Riskwiser Zone, it's crucial to stay informed and up-to-date on the latest developments in the business world, as these can have a significant impact on investment decisions. In another story that caught our attention, Parkland agrees to be bought by U.S. heavyweight Sunoco in a $9.1 billion deal. However, we will save this topic for another episode of the Riskwiser Zone. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.